I'm going to tackle about cash flow. What is cash flow? The term cash flow refers to the net amount of cash and cash equivalents being transferred in and out of a company. Cash received represents inflows while money spent represents outflows. A cash flow is a real virtual movement of money. A cash flow in its narrow sense is a payment, especially from one central bank account to another. The term cash flow is mostly used to describe. There are three types of cash flow. 1. Cash flow from operations. 2. Cash flow from investments. 3. Cash flow from financing. Cash flows from operations. Cash flow from operations or operating cash flow describes money flows involved directly with the production and sale of the good products ordinary operators. CFO indicates whether or not a company has enough funds coming in to pay its bills or operating expenses. In other words, there must be more operating cash flow than cash outflows for a company to be financially viable in the long term. 2. Cash flows from investing. Cash flow from investing, or CFI, or investing cash flow reports how much cash has been generated or spent from various investment-related activities in a specific period. Investing activities include purchase of speculative assets, investing in securities, or the sale of securities assets. Negative cash flow from investing activities might be due to a significant amount of cash being invested in long-term health of the company, such as research and development, and is not always a warning sign. Cash flows from financing. Cash flows from financing or financing cash flows shows the net flows of cash that are used to fund the company and its capital. Financing activities include transactions involving issuing debt, equity, and paying dividends. Cash flow from financing activities provide investors with insight into a company's financial strength and how well a company's capital structure is managed. How are cash flows different than revenues? Revenues refer to the income earned from selling goods and services. If an item is sold on a creditor or via a subscription payment plan, may not yet be received from those sales and booked as accounts receivable.